Welcome to the coding section of this month's strategy, which I'm calling the lower close on last day of the month. It's a seasonality strategy that I talked about in the prior video. This month's video is going to be a little bit different where I'm not going to show you how to code it, but rather describe the code because there's a lot going on here that it's going to be difficult to explain if I'm typing at the same time and trying to explain it in real time. So if you are interested in the code, you can find it in our community. It's posted in the seasonality section where I share not only seasonal effects, but coded trading strategies to take advantage of them, which you can just copy and paste into PineScript and run a backtest yourself and verify the results yourself. Otherwise, if you're watching this video, you can just copy the code down here by hand. But let's dive into it. So we have the boilerplate strategy code that I've used in every video in the series, and we have some comments to help organize the rest of the script. So the first thing is that we've created a function. Now, a function is basically a reusable set of code. And you can call a function just by calling the name of the function. So here, this function is called days in month, and a function can have any number of parameters. The official name for them is arguments, and that's what you see in the parentheses here. So we have open parentheses, close parentheses, and then a y and an m. So effectively, a function can be thought of as a formula where you pass in some values, and then the function will spit out a different result depending on what you pass in for the parameters, or the arguments as they're officially called. In this case, this is a formula to get the number of days in a month. And then it takes in a y and an m that represents year and a month. Now, what we're doing in this script is we're going to be passing in the current year and the current month, but officially you could pass in any year and any month, and it would tell you whether that month has 29 days if it's February, or 28 days if it's not a leap year, or if that month has 30 days in it or 31 days. And so that's what this logic is here. It's taking the month, and if the month equals 2, then the month is February. And then it has the rules for a leap year, meaning if the year modulus 4 is 0, year modulus 100 is not 0, or the year modulus 400 is 0, then it is a leap year. And the February, assuming the month is 2, then February has 29 days in it. Otherwise, that month, that February, has 28 days. Otherwise, if the month is not 2, meaning it's not February, then it just needs to check, is it a month that has only 30 days in it rather than 31? And that's what that logic does here. And so whenever you call the days in the month function, which is actually done down here, we've created a variable called last day of the month. And then it's going to call days in month, passing in the current year and the current time, or the current month. And time, if you look at it, it's the current bar time. So when we call year time, we're basically saying what is the year of the current bar. And that'll be this year, and the year or the month of the current bar is also this month. So that basically becomes y. The current year becomes y, and the current month becomes m over here. And then it's going to spit out either 29 or 28 if it's February, or if it's not February, then 30 or 31. And then here, what it's doing is it's saying the last day of the month is equal to the days in that month. And that's true if you think about it. So if a month has 30 days in it, then the last day of that month is day 30. And so we can just create a variable saying last day of the month is equal to the days in that month. And then what it's going to do is it's going to create a variable to track whether it's the last trading day of the month. And by default, it's going to assume that to be true. And that is because what it does immediately afterward is it checks whether there are any weekdays between today and the last day of the month. And if there are weekdays, and remember, this is because the market's not open on the weekends, or at least the U.S. market, a typical U.S. stock market, I should say. U.S. futures are naturally open on Sunday, but I won't talk about that. The U.S. stock market is not open on weekends. So if there is a weekday between tomorrow, so essentially remember that this entire script is going to run on every single bar. So what we do is we grab tomorrow. So we grab today's day of the month, we add 1 to it, and then check for every day from tomorrow to the last day of the month, is there a weekday? A weekday being any day between Monday or Friday inclusive. And if so, then we set this variable to false. So we defaulted it to true, and then we set it to false. And then break just means exit the loop. You don't need to check because you've already found a weekday. And therefore, today cannot be the last trading day of the month because there's a weekday between now and the last day of the month. And then at the end, the function is going to return a value. So like this function returns 29 or 28 if it's February, or 30 or 31 depending on the month. This one just returns true or false. By default, it's set to true. If it finds a weekday between tomorrow and the last day of the month, then it gets set to false, and then we'll return false. So I know that might be a bit of a mouthful, but that's also why I wanted to just explain the code rather than type it all out, because it'd be insane for me to type it out and then try to explain at the same time. It's a lot easier to make sense of if you're able to see the entire code and then kind of see how it's pieced together. And then, of course, the trading logic is nothing new. You've already seen this before. The entry rules are the close has to be lower than the close of yesterday, and it has to be the last trading day of the month. And remember that calling this function will return either true or false. And so both of these have to be true in order for us to have a long entry, which is done here. If this is true, meaning both of these are true, then we enter long. And then the exit is if today's close is higher than the high of the prior day, then what we do is we just close our position. And so that is the strategy. If we look at it on a chart, so right here we're looking at 2024, and the last day in June, last trading day of June 2024 was the 28th. So even though June is a month with 30 days, the last trading day is Friday, June 28th in the year 2024, and it would have entered long because it closed lower than the day before it, or the trading day before, I should say. And then, of course, it exits when the close of a day is higher than the high of the prior day. And then this year in 2025, go all the way over to 2025, which starts here. Because of the turbulence in the market that has not been true, and therefore we've only had 1 month where this strategy has triggered, and that was last month. So last trading day of May was Friday the 30th. It closed below the 29th, and so you would enter long there, and then you would exit when a day closes higher than the prior day's high, which was immediately the next day. So pretty fast, pretty short trade duration time. And then, of course, if you look at the equity curve, it matches what I showed in the previous video. So that is this month's strategy in code. Again, if you're a Patreon subscriber, you have access to the PineScript code in the seasonality section. You can just copy and paste it into TradingView. Otherwise, you'll have to go back, rewind a bit, and then look at the code, and then copy it down by hand, and then you can just then check yourself, or check the code yourself on TradingView. But otherwise, like I mentioned in the previous video, somewhere between this video and then the strategy video for next month, I'm going to be showing the strategy quant X workflow, actually pulling up the application, diving in, and showing you the steps that I use in every part of that data mining process. So stay tuned for that one.